Well, G20 leaders didn't reach a decision to keep currencies stable. Instead, they have agreed to keep talking about warning guidelines for another meltdown. And joining us now to make sense of it all is Nick Bontis, an award-winning professor from the DeGroote School of Business. Nice to have you with us again this week.
Happy Friday, Taz.
Thank you so much, Nick. Well, let's get right into it. Are currencies out of whack?
They are, in a sense, because, 1960s, go back to Milton Friedman, who won the Nobel Prize in economics. He said that when it came to domestic markets, a lot of them would be intertwined in a globalized marketplace. Well, let's fast forward 50 years. That's what we got, a globalized marketplace. So when you had your own currency within your own domestic market, it was okay back then because you didn't do much trade. Now with global trade, everything is interconnected. And when you have one organization, one country artificially pegging their currency against another, you're actually making advantages for that one country. So therein lies the problem, and that's why one of the outcomes out of the G20, especially for the long term, has to be free markets when it comes to currency exchange.
You used the word pegged, and I want to ask you about that because China is being blamed for its pegged exchange rate. What exactly does that mean?
Well, pegging the exchange rate is basically an artificial way to say, you know what, we're going to monitor the U.S. currency and stick to the U.S. currency. Unfortunately, though, for China, the U.S. dictates its monetary policy based on U.S. domestic situations, i.e. unemployment rate in the U.S., interest rates in the U.S., GDP growth in the U.S. So in a sense, China is pegging their own currency to another country's situation. And that's why it's turning out to be unfair now in the short term, because we know that the U.S. market is doing relatively poorly, but the Chinese market is doing relatively well, and it's taking advantage of pegging that currency.
I think Obama liked it. He called it an irritant, actually.
That's right. And that's why Obama wants it to be free, and so does the rest of the G20.
What about what he did earlier this week? The U.S. Federal Reserve buying $600 billion in bonds. Is that artificial inflation really going to help the U.S. in the long term?
So that's an interesting thing, Taz, because that's actually Obama cheating, believe it or not. Cheating in a way in terms of monetary policy. He can't artificially peg the currency or adjust it. So what does he do? He just does monetary policy. Buying so much actually will assist in terms of picking up the economy in the U.S.
Is it any different than what China is doing?
It is, technically speaking, because monetary policy is allowed for domestic governments, but of course pegging currencies is frowned upon. But the U.S. market is still in dire straits. 9.6 unemployment rate, GDP growth is stagnant, and we still have a deficit issue that's quite severe. So it was expected that Obama would do that monetary policy to help prop up the U.S. currency.
Why doesn't Canada ever do something like this? When we need to boost our economy, it seems that the government lowers taxes or issues refunds or things of that nature. Is this the straight and narrow way to go?
No, it's not. Actually, the Bank of Canada is quite restrained, and the reason for that is, Taz, because we're not doing too bad. It's actually the U.S. market that's significantly poor in terms of the health of the economy versus the Canadian marketplace, so that's why the Bank of Canada is actually holding on tight.
Well, still with trade now, we're talking Canada and India are formally taking into talks about a comprehensive free trade agreement. And I fail to see how we would benefit from this. I mean, they make things so cheap in that country. How could you possibly compete?
You're absolutely right, Taz. I still haven't figured out it. In terms of manufactured goods, it's pretty much a wipeout. I mean, India has already announced that they can make an automobile that's going to retail for $2,400 Canadian. We're nowhere near that. But where we do have significant trade is not necessarily on durable manufactured goods, but on intellectual capital and on tangible assets, services, software, call centers, and in fact education as well, with a lot of Indians coming here to be educated in our Canadian universities.
Well, we were talking about phone services a couple of weeks ago, and I think India had the lowest rates for cell phone services. So again, wouldn't that put us at a disadvantage?
It would put us at a disadvantage only if the Canadian government once, sometime in the future, had the guts to announce that foreign manufacturers of telecommunications companies would be allowed to sell to Canadians here in Canada. Of course, that's not going to happen in the short term. We have Rogers and Bell and TELUS. They would never allow it. But you can imagine the government once saying, yeah, India, you come and sell cell phones to Canadians. Then we'll see what happens to prices. They'll go down for sure.
Wow. Well, okay, let's look at something at a more local scope. The Ticats Stadium plans. We actually seem to be on a positive momentum here at this point. The city and the Cats seem to be on the same page. They're talking about a destination center. What's your thoughts on that?
Well, it's a pretty picture, that's for sure. We see the nice graphic there, and there's going to be a nice hotel, conference center, some shops, a little bit of a pedestrian area. A lot of young people have been wanting a little bit of a pedestrian area in Hamilton for the longest time. Unfortunately, it's so weird because we've spent months and months and months talking about how we can't come up with extra $50 million. And here we go, let's blow up the project to now include a hotel and, you know, pedestrian space that's going to make it even more expensive. So there's really no discussion as to who's going to pay for this. The only thing that I can actually envision is what's happening in downtown Toronto with the Air Canada Centre. Most recently, Maple Leaf Sports and Entertainment invested heavily in a hotel and retail space, and it's quite actually a spectacular place down there in downtown. So I think Hamilton is having a little bit of a relative city envy. Wants to do the same thing in our city as well.
Now, right now, I think they're saying we're $53 million short. You think it actually is a greater number than that?
Well, I think that's the problem with a lot of these development projects. You know, you start with a number, and when it comes time to actually building it and paying for it, it actually turns out to be an even higher number than you predicted. So $53 million is probably a conservative estimate. We still haven't figured out who's going to come, actually purchase some of these locations, who's actually going to fund it, who's actually going to advertise and do promotion in these locations. That's still the unanswered question.
Any ideas, any names that you're willing to throw out there?
Well, you know what, when it comes to sports advertising, it's all the big names, right? You know, the big manufacturers, the Procter & Gambles of the world, you know, the Nikes, the Adidas. You know, the question really boils down to, do they think there's enough eyeballs coming into downtown Hamilton for those stores, for those sporting events, to actually warrant the investment? I'm not so convinced, but I would love to be surprised.
Okay, well, it is day 5 of the U.S. Steel Lockout plan, as I'm sure you know. Neither side appears to be budging, although we did just learn just a couple of minutes ago that the two new parties are going to be in court and they're making cases for their voices to be heard in that legal fight. How have things changed this time around from the last lockout that we saw?
So the interesting thing about what's happening with union strife and, you know, complications between labor and management negotiations is that we now have Web 2.0. Social websites, message boards, Facebook. These are things that didn't exist 10 years ago when we used to have strikes here dealing with steel in Hamilton. What that means is that now we have the democratization of information. Anybody can log on to these websites and actually hear the arguments from the union leaders, from union members, even from the management side. So it's basically making people more aware and educated of the issues. The information travels at lightning speed, and that's why now you have these two distinct organizations trying to pool their intellectual capital together to actually make for a stronger negotiation.
So who stands to gain from this? Who gets the advantage in this? Is it the unionized workers or is it the companies?
I think in the end it's actually the employees that gain, because if you go back 10, 15, 20 years, the union leadership would claim, here is what we're doing to represent all of the union members, and they would have to physically go into everybody's kitchen table over coffee to actually discuss what that position was going to be. Nowadays, it doesn't have to happen so laboriously. It can actually happen very, very quickly on Facebook, where everybody communicates.
Members trying to maybe go above the union and talk about a vote?
That's correct.
Even though the union had rejected it?
That's correct, because union leadership had said that there was going to be full solidarity in terms of their arguments for negotiation, whereas the union members talking among themselves on Facebook said, no, 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 you didn't actually come to us. We have some other information we'd like to talk to you about. Okay,
here's something I want to talk to you about. Gas prices hovering around $1.10 a liter.
Yeah.
How much higher can they go in the next year?
Unfortunately, they can go higher. And there's variance within Hamilton. You know, HamiltonGasPrices.com, we got ranges from about $1.07 in East Hamilton to about $1.11 up on the mountain in Ancaster. This compares actually a little bit favorably, Taz, to Toronto, which is $1.12, and even Vancouver, which is as high as $1.15. But let's remember 2008, where gas prices skyrocketed. We had problems with oil prices, if you recall, and the hurricanes. Gas went up as high as $1.34. So we do have space to room, I think. I'm predicting, Taz, that we're going to be upwards of about $1.15 to $1.20 through the winter season. So for those people who are watching their budgets, try to add another 10% on your gasoline
10%.
budget. Yeah, a little bit of 10% just to be safe.
Wow. Well, the Chevy Volt is out, of course. Well, it's in showrooms.
That's right.
It comes with a big price tag, though, starting at $41,000 US. So when we factor in the cost, the high cost of electricity and the price tag for this vehicle, are people actually going to save money?
Yeah. They're actually going to save money. If you crunch the numbers, gas has to rise to a real significant high level between this. Actually makes very, very economic sense, upwards of about $1.35, $1.40. So if gas hits that level, then absolutely these electric hybrid vehicles are good economic savers. You're right, Taz, $41,000 for the Chevy Volt. It's actually a little bit more expensive than another car that's coming out, which is the Nissan Leaf. That one's going to be coming out at $33,000. And the difference between the two cars is that the Chevy Volt is hybrid, it's electric, but it also has gas in case you need it or run out of electricity, whereas the Nissan Leaf is 100% electric, so it's got to be plugged in, and once you run out of that range, you got to plug it back in again.
Very interesting. Yeah. Our final topic this week is Google giving its employees a 10% raise, all of them, like almost 23,000. How is a company able to do this? And how can we get other companies to do the same thing?
10% bonus. I love it.
No
so
kidding.
here are the 2 words: voluntary turnover. What's the definition of voluntary turnover? It means when employees walk out of the door voluntarily, and where are they going, Taz? They're all going to Facebook. That's right. Facebook is the new kid on the block, offering higher salaries, higher stock options. And what Google wanted to do was stop all that outflow of human capital. So in response, everybody 10% bonus, Christmas early in California.
If only everyone did that. Okay, well, that is Bontis on Business for this week. Be sure to check out his website, nickbontis.com. Nick, always a pleasure having you with us.
Thanks, Taz.
Thank you so much.